good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 16th of May, 2019, and we're about 4:11 p.m. Central Daylight Time. What a crazy day. I was watching these markets take off today, and one of my favorite tools is this one, the pivot point, when I don't see a trend taking place. And that's part of what I'm seeing right here. So I was looking at that tool, and I'm going, I don't know, you got up pretty high in these numbers, and if you use this tool, you'll see where it got into the sell zones in them. That's what I think paused the market. Now, what have we really done? We broke early in the week, and we've made up a lot of that lost ground, and we'll take a look at that in a minute. At the same time, the trade that so many traders thought was going to happen, the weak dollar. Well, we're almost through with the first half of the year, right? We're at May 16th. That dollar's near all-time, on this level, on this move. Not an all-time high, I'd be wrong. A new high is the better word on it. We're still getting bids in the energy market, still problems between the U.S. and Iran, but they're trying to tame down words. Already today, I think it was the vice premier of Iran came out and they were talking, well, if the U.S. went back to its 2015 stance, first off, if the last words were, the U.S. is no good, their word is no good, we don't negotiate with them. Suddenly there's a little toning down of that. We know that our allies have backed off on all this because you're not seeing the Brits behind the U.S. on it. Germany certainly isn't behind the U.S. They're almost like our enemy. All right, it's a problem there. And if you're watching the other markets, it was a risk-off day. What do I mean by that? Traders were buying, that's number one. Risk on was where we were when the safe trades, buying the bonds and notes, buying the gold market, which lost a lot, and buying the yen, which is down. That's what those trades were. They came off today. That doesn't mean they can't go on like that. The U.S. economic data, been pretty good, in fact. When we look at a weekly area chart of closes, you're in a corrective mode. You're still down 1/4 of a point. That's all you're down for the week. I mean, earlier in the week, it was a lot more than this. The market has made up some ground. And you see that lost ground right through here. Remember, this is Thursday, Wednesday, Tuesday, Monday, right? This is what you were down. So you were down in this market 2.77%. And if you look at these points, you've made it up. You're back to where you were starting out on Friday. But the overall pattern is still one where the market has been shirking off these highs and coming down. Where'd the markets get some support? We'll get to that in a minute. What is the trend first? By definition of the swing line, it's down. You've got lower highs, lower lows. You have to take out on this chart 20, in fact, what is that exact high? I can't read it. 28.9950 in order to negate the pattern of lower highs, lower lows. You got up to 28.94 today, ran out of momentum. Why? Well, I can't answer that it's the 18-day average of closes. No way I can do it. You didn't also get to the 200-day average yet, and so many traders thought that that was where you were going to get a bounce from. You certainly got close to it. Just a market that bounced. In terms of Bollinger Bands, in the first part of the week, you were under them, and then you snapped back over them. And in terms of momentum, well, you were oversold. You're no longer there. I define oversold as having either one of the numbers that make up the slow stochastic. They're called a K and a D line. And by the way, the big difference between the two in the formula is one uses 3 days worth of data on a daily chart. The other uses 5 days worth of data on a daily chart. There's weekly charts, intraday charts, many ways to look at it. In any case, if the market wants to make a run to the 18-day average of closes and gets over 28.99 in doing so, because that number, I don't know where it's going to be in the morning or tonight when we reopen, that'll be the interesting part. But even if you take it out, you still have that to deal with. When I look at the NASDAQ, this was one of those charts today that I'm telling you, I had hit the pivot points, and you look at the setup. If you know how to work with these, it was interesting as can be. Momentum corrected, past tense, oversold condition. You have to get up and over this level now. This is 20, what is that exact level? Can't read it on this. 76.98 in order to turn what? negate the downtrend. It would not turn the market up. 76.94 is roughly the 18-day average. So you can take that out and still run into that brick wall. Should you start taking out today's lows without getting over those swing line numbers, watch out. This could have just been the correction. In the Dow, we fell earlier on in the week to the 200-day and the 100-day average, and we've bounced away from it. Here too, if you get over 26,079, you break the pattern of lower highs, lower lows, but you've got this number, that 18-day average of closes, waiting for you as resistance. I'm saying this is a bounce. I'm not saying this in plain English as a trend change on anything. And in the Russell, this is an important day. You hit the 200-day moving average and bang, you ran into that wall. It just literally stopped. Above it's the 18-day. I'll be surprised if the pros aren't sellers in that with tight stops over that last high. Can I get a buy signal out of this as a chartist? No. Because even if you went straight up, you'd have this lower low if you took that out and then a higher high. You've worked off the oversold condition, though, is important. And guess where the VIX stopped? We talked about it the other day that I thought that by Tuesday, the traders got more comfortable with possibly considering selling of calls in this market to see if they could drive it back first to the 100-day average and maybe the 18. Today, you tell me where it went to. Bingo. So I think you've got a market here that is interesting. Today's low was 15.16. This low, just so we can see it, was 15.57. So what does that do? Puts the market, actually, these numbers are wrong. I should have lower highs, lower lows. Downtrend in the swing line. The settlements under the 18-day average. This market's back into a downtrend with resistance between the 18 and the 100-day average of closes. I just missed where those arrows were. T-bonds, overbought. Been riding this Bollinger Band. Eventually, you move away from that. I don't know when it will be. I don't claim I know, but the market looks to me a little tired at this point. I'm going to say the same thing on the 10-year notes. Take out these swing line numbers, and what you might end up doing is turning these numbers down. Now, both numbers are over 80 today. Both were over yesterday, 80, not the day before. It's just an overbought condition. TLT. This market, if we look at the embedded reading, it's the first thing I'm looking at here. Both numbers are over 80, both over 80, both over 80. It's different. This is a stronger market. In order for this to get any momentum to the downside, you have to get the red line to close under 80. And if that occurs, then I'll look for price in the 18-day average to come back. But right now, the bulls have grabbed control of this particular market. Dollar index, not trending. You've got a lower low than that, a higher high. You're caught in here. These were the old recent highs the market made. It'll have trouble, I think, in that area along with the Bollinger Band. Momentum up, bias up. What trade have most of the traders had wrong this year? I just heard, go back to December, the dollar was going to be lower. We're at May 16th. I'm not saying it can't end lower for the year. I'm saying it hasn't, and I think it's rattled a lot of traders. And if you look at the eurocurrency, this is one of your weaker currencies, and it broke through any potential support it might have had. So we're out of a trend here too. You got a higher high, lower low. What do I think, just me, is typically the best trending of the markets? Currencies. It's not that way, and hasn't been this way most of this year, which is fascinating. In the British pound, it looks like they finally have pushed out the door Miss May. Already Boris Johnson is saying, I'm running, I'm going to be your next prime minister. Of course, Boris. In any case, lower highs, lower lows, running down here, oversold, but trying to trade anything in this currency, as I've said for months, very hard, because every day is a new report. And I'm talking big ones. In the end, caution time. You lost the embedded reading. The first support is the closest of the main moving averages. So the 100 stopped it. If it gains momentum, it could slip on you all the way back here. But the first area of supports here, you're out of a trend. You've got the swing line down, you have the bias up, and momentum's trying to turn down. In Bitcoin, how long do you want to stay over upper Bollinger Bands? You get ahead of yourself. So now we have an outside day down. The problem with that is you still have the embedded reading, which is still number one in the hierarchy here. Until that's lost, I'll view pullbacks as still friendly. But are we trending? Nope. Now you've got a higher high, excuse me, a lower low. Crude oil. It's hard to fight Brent versus WTI with warships, with talks of war, but the Iranians are saying things that are toning things down. And that's a good thing. I don't think that we want to go to war. The president, there was news releases today that on Wednesday, it seems so long ago, it's yesterday, you know, he was telling his Secretary of Defense and so on, he really doesn't want to go to war with Iran. Okay, the market's not buying it. Brent is still strong. Higher lows, higher highs. The support's the 18-day average, resistance, the upper Bollinger Band. Could this market suddenly turn bearish? Not on this chart pattern. If it fell straight down, you'd have a higher high and lower low. Momentum up, bias up, trend up. Maybe we get to the top part of that current range. In the WTI, excuse me, it's the 18-day average the market's fighting at again. It fought with it here, it fought with it here. It's not got the same momentum that you're having out of the Brent, which makes sense. If there's going to be a skirmish in the Persian Gulf, it's not WTI that's going to be shortage of, it's going to be the Brent. Gasoline, back into its uptrend. Now, we do have a driving holiday coming ahead of us. And what the market did this week, got to that 18-day average, had an outside day down. What's my theory in that? If you take out the high of an outside day down within 2 days, you've created a bear trap. Didn't do it the day after, didn't do it here. So today's rally is not a bear trap. Rather, I think what you've got is the higher lows. The market's got the higher high. It needed a close over the 18-day average. It's got it. Bias up, trend up. Possibly putting into play the upper Bollinger Band with support back at the 18-day average. And again, even if you fell straight down, and I mean straight, you couldn't turn it into a bear trend. Now it's turned back up. You just missed the support level in the nat gas of the 18-day average of closes. The resistance showed itself. The trend is up. I'll stick with what I said. I think this was your low that we're going to see for the summer months. The market's going to try to move to the upside, in my opinion, because eventually the weather gets warm. And this is not a market that's anything, in my opinion, but a weather market at this time of the year. Could I be wrong? I could be very wrong. If you took out 25.61, I'd be scratching my chin. But right now, the support level still looks like that 18-day average. It is overbought. It's already hit an upside target. If you'd like to learn more about pivot points, and I think you should in markets that move like these where they're not getting much duration in the move, it's a 3-point series. The first is the video that teaches you the formula. The second, how to apply the pivot point on your chart, and just about all of them work the same way. The last video of it, how do you tie slow stochastics to it? How do you get it? And it's free. Go to our website. Excuse me, it's on our carousel of free offers. You can call my staff, or you can click up here, and if you click there, it'll take you right to the page. Allergies, sorry about it, but we're in the Midwest and it's allergy season. Take care.